5 books Warren Buffett recommends to become an intelligent investor. Warren Buffett, one of the world's richest men and the greatest investor of our time, has always said his success comes from one simple habit: reading every day. He spends up to 80% of his time with books. But here's the real secret. Buffett doesn't just read any book. He returns again and again to a handful of classics that shaped his philosophy of intelligent investing. Today, let's explore 5 of Buffett's favorite books and how they can help you invest smarter, avoid costly mistakes, and think like the Oracle of Omaha himself. Book 1. The Intelligent Investor. The first book Buffett calls the best book on investing ever written is The Intelligent Investor by Benjamin Graham. This is where Buffett learned about value investing, the art of buying companies for less than they are worth. The key lesson: always demand a margin of safety. Don't chase hype. Don't gamble on hot stocks. Look for solid businesses trading below intrinsic value. If you only read one book on investing, Buffett insists it should be this one. Book 2, Security Analysis. Next, Security Analysis, also by Graham and Dodd. Think of this as the Intelligent Investor's older, more detailed sibling. It's dense, yes, but it teaches you how to really dig into financial statements, balance sheets, and income reports. Buffett studied this at Columbia, and it gave him the analytical foundation to separate strong companies from weak ones. The lesson: if you want to master the numbers behind investing, this book trains you to see what others miss. Book 3, Common Stocks and Uncommon Profits. While Graham taught Buffett about numbers, Philip Fisher's Common Stocks and Uncommon Profits taught him about people. Fisher argued that to find great investments, you can't just look at financials, you must also evaluate management quality, company culture, and long-term growth potential. Buffett blended Graham's discipline with Fisher's vision, and that's why he invests in companies like Apple, Coca-Cola, and American Express, not just because they're cheap, but because they're run by outstanding leaders with durable advantages. Book 4, Business Adventures. Then there's Business Adventures by John Brooks, a collection of real stories about Wall Street, successes and failures. Bill Gates gave this book to Buffett, who later called it the best business book he's ever read. Why? Because history repeats itself. These case studies show how greed, poor leadership, or short-term thinking can destroy even the biggest companies. For you as an investor, the lesson is clear: study failure. It teaches you as much, if not more, than success. Book 5, The Outsiders. Finally, The Outsiders by William Thorndike, which profiles 8 unconventional CEOs who ignored Wall Street's noise and built massive value for shareholders. One of them, Tom Murphy, was Buffett's close friend. Buffett called him the best business manager I've ever met. The lesson here is leadership. Great CEOs focus relentlessly on capital allocation, how every dollar is spent. As an investor, if you can identify companies led by outsider CEOs with this discipline, you've struck gold. Buffett's philosophy. Put these 5 books together and you see the blueprint of Warren Buffett's mind. Graham gave him the foundation of value investing and safety. Fisher taught him to look for visionary leaders and long-term growth. Brooks showed him that history and human behavior matter. Thorndike proved the power of capital allocation and great CEOs. Buffett's secret isn't just in picking stocks, it's in picking the right principles. These books give you those principles. So if you want to become an intelligent investor in Buffett's way, start here. Don't just read stock tips online, study the timeless wisdom in these 5 books. The best investment you'll ever make is the investment in your own mind. Which of these books have you read or will you start with? Let me know in the comments. And if you want more book-inspired wisdom every week, hit subscribe and join us on the journey to becoming smarter, wiser investors.